Good day. Ira Epstein with your financial market wrap-up, and this is for Thursday, the 13th of February, 2020, and we're getting on to 4:30 in the afternoon. I want to wish y'all, I will be here tomorrow, by the way, a happy Valentine's Day. Don't forget about that. Well, as you can see, stock market basically a correction to the downside. It's interesting. You made your lows early in the day, went up for those highs, and late in the day, everything came rolling back down. What you got to be careful about is we're getting into that holiday mentality. We're not open on Monday, not at least I won't be here. Most people won't. The electronic markets have their own holiday schedule. They're open Sunday. They close early on Monday electronically. Then they reopen at 5 in the afternoon, but not everything reopens until Tuesday. So it's confusing. If you didn't get anything from us, ask your broker if you're not with us, but all of our clients got the schedule. As you can see, you're still up and away, 51 points higher on the week, bullish. When we take a look at this chart, you had today a key reversal down. What's a key reversal? You hit the highest high of a move, you take out the previous day's low, you close lower on the day. Admittedly, you close near the highs today, not the lows. If you take out today's high, that's a trap that it's not an outside day down for the reversal going to have any power to it. So what I do is I look to see where we're at. We're in a pattern of higher lows, higher highs. I know you see that. The market's over the 18-day average. If you don't take out that high, I'm looking for a pullback. The resistance, if you take out today's high, my theory is if you take out the high of an outside day down, the percentage increases greatly. You're going to go to the closest moving average above the market. I don't have them above the market. Or the Bollinger Band. I have the Bollinger Band right there. So they'll put in that 3,400 level as an objective in the S&P. Momentum-wise, what do we have? Well, if we take a look here, this day had both numbers over 80 again, both sets, and today you developed what we call an embedded slow stochastic. To me, this rules the day, not what this does. Until the red line gets back under 80 on a closing basis, I contend the pros are going to be buying this market on the breaks. Same thing in the NASDAQ. Yes, you had that key reversal. Same way. I don't care. This is what I care about. I care about momentum. The momentum leads price most of the time. We know that people are nervous about a 3-day weekend. That doesn't mean that they've changed the momentum of the market. In the Dow, overbought, a different type of look, and you didn't have the key reversal day. In fact, today you got pretty much of a day that you got just snuck out a higher high. You never took out the lower low, but it's been overbought. It's struggling to get up to that upper Bollinger Band. The Russell saw a shift of money into it out of nowhere today. While the other markets struggled and closed slightly lower, this one had an outside day to the upside. So if it's going to follow through, and it is overbought, if it does, the Bollinger Band's a target. Take out today's low, then I'm looking for that 18-day average. Remember what I just said? You get an outside day. This one's up. If you take out the low, then I'm looking for the closest moving average, or the Bollinger Band would be the 18-day average of closes. I don't like that it's overbought already. In the VIX, all we were looking for, and I think I've said it to you during the week, first support, the 18-day average of closes. Then you have this area between the 100 and the 18. Other traders see this, so if you work your way in there, that's a support zone. You still have momentum down, trend down, but you've really got to punch through that to be able to stay anywhere. You tried, and you came right back today. So where did it go again? To that line in the sand. The trend is down, oversold as can be, found into a layer of support right here. In the T-bond market, you have a pattern of lower highs, higher lows. That's the hardest thing that I know to trade. If you get back under 161.15, this low, you could end up with lower highs, lower lows under the 18-day average, and momentum's already pointing down. So that's the setup that I'm looking at if you're bearish. What if you're bullish? I don't like the fact that momentum's down. But if you took out 163.9, you already have the pattern of higher lows. That would put in place the higher high for wherever the upper Bollinger Band is. The bias is up right now. But again, you're not trending. You got the lower highs, higher lows. You got the same exact play in the 10-year notes. If you get under this low, the bias will turn. You'd have to come back and close over 130.23. You've already got the lower highs. That would give you the lower low. Let me flip it around. Take out that high. Don't take out this low. And the only thing against it is momentum's pointing down. I don't think it would turn on a dime, the momentum. Dollar index, no sign of letting up here. You have the fully embedded reading. You've got the higher lows, higher highs. You got ahead of yourself by staying right here over these upper Bollinger Bands. It's rare to get 5 in a row over it. You pulled back to the right-hand side, and you put the market right where it should be, within the bands, and it's still marching higher. Eurocurrency, just in a state of collapse. That's the only word I know how to use on it. Just a state of collapse. As bullish as the dollar is, that's how bearish this currency is. When the stochastics get lost here and they get over 20, I'll be looking for the market to say enough's enough, and go into the dollar, get under 80, it's enough's enough. You're not there at this point. Japanese yen, too oversold. Not even trying to embed. Doesn't mean it can't go lower, but it's hard to be a new position trader with the trend, which is down with lower highs, lower lows in that oversold market. To negate the downtrend, all it needs to do is take out 91.43.5. Bitcoin, I want you to look at Bollinger Bands. 95% of the time, market's going to stay within them. So you have a key reversal down today. This rules the day. That's where you may come out, but I expect the pros to be buying here unless that red line closes under 80. Then you might say, okay, we're going into a pause. That might put in the 9,500 level where that 18-day average is. In the Brent versus WTI, I said it yesterday when this market looked like that. I said, okay, that might be where the market's finally found its value. And you're up because the world is hoping that if China can gradually get the factories, the stores open, and life back to normal, there'll be that demand for the oil down the road. Right now, it's at sea. They're flooded with oil, storing it on tankers, asking OPEC not to send. Look here, you've lost your embedded reading. When you lose that reading, you often go for the 18-day average. What did I say yesterday? I said you're right at the verge of losing it. Watch, which was last night, to see if you lose it. You've lost it. I'm expecting the 18-day average and price to come together now. Same thing in the WTI crude. Yesterday, here's the close Wednesday, and I said, got to be careful here. And that's it. So as far as I'm concerned, I'm looking for price in the 18-day average to come together. And at that point, I don't know what you do with it because you don't have buy signals, you don't have sell signals yet. It's just sort of this momentum is giving you a warning sign that you might not want to be there. Gasoline, until you can take out this low again, it certainly's got the makings of a market that looks like it wants to move higher, and I've just lost the charts. It's 430 right on the head, and that's why it is. I tried to sneak it in, but I can't. Want to remind you about my research. If you're interested in it, go to our website. You're going to see that I offer a free trial to it in the written, the videos, everything else you want there. It's a good weekend to take a look at it. Look at the different videos, the way that we write. Let me get you on the newsletter, and we'll take it from that point. You can get there by going to www.iraepstein.com. You can always call my staff at 866-973-2077, and I'll see you tomorrow.